Mr. Mohan Goenka joining us now, director at Emami. He's joining us from Kolkata. Thank you so much, Mr. Goenka, for joining us here on NDTV Profit. So, one, very strong set of numbers posted by the company, and second, your strategy has been, quite aggressive when it comes to brand extensions and new product launches. What is planned ahead?
Yeah, surely I am very happy with the first quarter numbers, top line growth of 26%, which has come almost after 15 quarters. For the year I am looking for a growth of almost about 19 to 20% top line. So this year, this growth has been led by a lot of new launches and extensions, which is mostly in deodorants and face wash. So those two led to almost a 4% growth in the top line, and I am expecting this year to be better than the last year, surely. We are going very aggressive in terms of our plans. Also for acquisition, we did a very small size acquisition in India, so which was part of our strategy, which we will be rolling out in the month of August.
Could you give us some details about the acquisition that you're planning now? Which segment are you looking forward to?
Just now we have done acquisition of She brand, which is in the sanitary napkin. But as of now we don't have really anything on the table, but we are always looking for acquisition. Sorry?
I'm asking about the acquisition that you're planning in FY15 going ahead from here on. Which segments are you looking forward to?
Now, as I said that presently we don't really have anything on the table, but we are looking mostly in the healthcare space, and our focus would be India. Though we are looking for a very small size acquisition in the African market, but that is mostly to strengthen our distribution in Africa.
All right, Mr. Goenka, I'm trying to understand, thanks to the new launches, what kind of volume growth did you achieve in the April to June period?
So our volume growth was about 17%, and in domestic we did a volume growth of about 14%.
Right. Mr. Goenka, if you look at your EBITDA margins, they have come off quite sharply. The figures that I have is that your EBITDA margin has come in at 15.6% versus 22.1% in the same period a year ago. I understand that you had a lot of advertising expenses thanks to the new launches. Now, what does this mean for EBITDA margins in the year? What is the sustainable EBITDA margin for Emami?
So for the year, we are looking for a EBITDA margin of about 21%. Last year we had a margin of roughly 24%. So there might be a slight contraction in EBITDA margin. That is purely we are going to invest on new categories. But for this quarter, we have rather grown in our margins.
Right. Aren't your advertising costs much higher, sir? Hasn't that, I understand your depreciation has come off, but your advertising costs have gone higher. So, isn't the margin under pressure this quarter?
No, our margins have gone up in this quarter, and we have invested mostly on the deodorant and face wash. So there was a jump of 40% in this quarter, but on a yearly basis, the advertising will go up by about 300 basis points, which is well below within our targets.
Right. Sir, I also want to understand now, you acquired sanitary napkin brand She Comfort. So, what kind of revenue did you see from these two particular, one acquisition and one new launch? How much did it contribute to your overall revenue in the first quarter?
She we haven't launched as of now. We are going to launch in this month. but from our extensions, we got about 4% contribution in the first quarter.
Right.
But
And
we have big plans for the sanitary napkin business because the female hygiene market is pretty large in India and with very low penetration.
right. And when it comes to your international business in particular, is the company looking forward to a different kind of a strategy? Because there were some reports coming in that Emami is planning to liquidate its UK arm, considering revisiting its plan for the Egypt unit.
Yes, if you see our international numbers in the first quarter, we have almost doubled from last year. So definitely we have become aggressive. We have done a lot of restructuring in the international business. UK arm was very small, so it was not making any sense to keep that arm. So we have just liquidated. And Egypt, because of political issues, we postponed our manufacturing there. But because now there is a lot of stability in that market, so we are just revisiting if we can start the plant in Egypt, because the Middle East almost contributes to about 35% of the revenues in the international business.
Mr. Goenka, are you considering any price hikes in the days ahead for some of your mature products?
We have already taken almost 6% price rise in the first quarter, so I don't see any further price rise in the year.
Right. And what about raw material prices? Are you seeing raw material costs remaining benign in the quarters ahead? Could there be a upward move in that? Because last year mentha prices had come off quite a bit.
We are very comfortable as far as the COGS are concerned. If you would see, we have rather gained about 150 basis points increase in gross margins. So we are well within our targets, and as far as the mentha oil is concerned, the prices are quite stable for the last 10 months, and I don't see any reason why the prices should go up from here.
So lastly, can you tell us what is the cash on the books? If you are going to be looking at acquisition, how much cash do you have on the books?
So presently we have a war chest of about 500 crores in our books, and we are even open for large size acquisitions in India, as I said, particularly in the healthcare space.
And these would be leverage deals, or will it be completely cash based?
So presently we don't have anything on the table right now, but if the deal is lucrative, we are definitely we can leverage ourselves.
All right, Mr. Goenka, thank you so much for joining us on NDTV Profit.